Okay. Good afternoon, good morning, good evening, wherever you're joining us to this warm welcome to Bangkok online, I guess I can say that, to this policy dialogue we are holding to discuss the findings of our latest issue of the Economic and Social Survey of Asia and the Pacific. As you know, this is the flagship publication of ESCAP, and we are very, very proud of this publication. I'll try and put things a little more broadly in context rather than getting into the specifics, which I'll leave up to my colleagues to discuss in detail. Survey, as we shortly call it, is essentially one of the longest continuously running reports in the United Nations system. It has been in print since 1947. And up until 1978, when World Bank and later on IMF and ADB and others started producing similar reports, it was the only report of its kind in the entire Asia Pacific region. And it has informed literally generations of policymakers on economic and development issues in the region, what kind of policies can be pursued, and so on and so forth. Even now, when member states have access to several outlets to get advice on economic and development issues, UN system as a whole, including ESCAP, we have tried to develop a sort of a niche in terms of our value addition, where exactly we are coming in and why somebody should pick out a report and read it. So I'll talk a little bit about on those lines, and then I'll hand over to my colleague Vacharin, who will take you through the specific findings of this year's survey. So in broad terms, the Economic and Social Survey essentially has two parts. One is, you can say, a little bit of a traditional macroeconomic assessment of the regional economies. Even in that part, we try and deliberately don't go into the mechanical exercise of growth up and growth down and why and so on and so forth. We talk about that still. We share near-term economic outlook in terms of GDP. However, we do make it a point that this is not alone. Assessing GDP dynamics alone is not sufficient. There's more to economies, basically. So we talk about, for instance, is the current growth patterns is helpful for reducing poverty? What kind of trends, inequality trends it is generating? What kind of carbon footprint the growth production patterns and the growth structure is actually leading to? And we try and comment on those things. And then, of course, we discuss emerging issues. Pandemic emerged, a war in Ukraine, and try and shed light on those latest emerging developments as well. And then try and tie up our policy recommendations in that context. The second part typically is much more research-oriented theme we pick every year. And there is some sense of continuation in these themes that we have been working on for several years. Broadly, I like to call them thinking beyond GDP, but you will see, I'll explain a little bit. We essentially pick a research theme and then delve deeper within that theme and assess from all sorts of angles, again, trying to tease out policy perspectives. And since 2015, very deliberately, in a very deliberate manner, trying to shed light on the prospects of sustainable development as a whole. So we have worked on issues of productivity, governance, financing, SDG costing, resilience, inequality, sustainability, and those kind of research themes in the past a few rounds of discussion. Now, one fundamental policy message, as I was trying to highlight, that we have tried to highlight, which we like to think is our niche, our value addition compared to other similar reports, and more so in the context of the COVID-19 pandemic, is that conventional economic recovery or conventional economic dynamics as measured by revival of GDP growth may not be sufficient in the era of 2030 Agenda for Sustainable Development. Or rather, there is a need to invest in people and the planet. Right? This is what I mean by think beyond GDP. In other words, a recovery that essentially promotes the welfare of all people in a society and one that nurtures our environment. And then we look from an economist perspective how to go about doing these things, suggest some ways in terms of policies, how it can be actually done. But we see, and I'm sure all of you can relate to that, despite experiencing significant setbacks in development gains that adversely affect people and our environment due to various economic and non-economic shocks, COVID being the latest. And again, GDP growth, as opposed to investing in people and planet. And these two considerations remain sort of an afterthought. In most mainstream economic policy making, that is the case. Why that is the case, that's a much more deeper and fundamental question. Why can't investing in people and planet be pursued simultaneously to support inclusivity and sustainability? So other than getting into the policy, we actually had normally write a short chapter where we'd go, typically the first chapter, we try and tackle some of these broader conceptual theoretical underpinnings, which actually informs the readers where we are coming from when we talk about policy suggestions. So for instance, just to give you a short example, at a fundamental level, we think the problem is actually rooted in the core assumptions of mainstream economic thinking that actually informs policy decisions. Relentless pursuit of self-interest. That's a core assumption of macro. We don't emphasize in macro pursue objectives collaboratively. Preference of efficiency at all costs. Knowingly at times it creates problems for the environment, but efficiency is prioritized. Unfettered role of markets, which tends to be a dominating approach in mainstream macro issues, which again has several adverse implications from the perspective of sustainable development. So behaviors and policies informed by such thinking produce exclusion of people and exploitation of environment and natural resources. So a central premise of this approach tends to be that GDP growth is the yardstick of economic success, which is then wrongly equated with the human and societal well-being. And hence the focus tends to be on investing in GDP rather than, as I was saying, investing in people and planet. We all understand and can appreciate that, yes, the single-minded pursuit of GDP growth has generated great wealth for the people of Asia and the Pacific. However, it has come at significant costs and is becoming increasingly known now in terms of persistence of poverty in many countries, escalating inequalities, environmental degradation, and in a bigger philosophical sense, even a crisis of meaning and purpose. So this is the lens through which we approach our research in the economic and social survey. So just to give you a short example, and then I'll stop after that. For instance, focusing on the unsustainable consumption and production patterns in the survey 2020, we called for building a stakeholder economy and suggest behavioral and policy adjustments needed by governments, businesses, and consumers. Similarly, in the survey 2021, we focused on enhancing resilience against systemic shocks. It was done in the context of COVID pandemic and analyzed what we have been calling a build forward better policy package that can enhance access to healthcare and social protection, improve access to digital technologies, and strengthen climate and clean energy actions. In the same spirit, the survey 2022, the one we're going to discuss at length today, draws attention to the importance of inclusiveness and delves then into the role of fiscal policies, central banking policies, and structural policies that can facilitate that. We sort of call it build forward better, build forward fairer kind of policies. So this is just to give you, just to tease you, just to give you a broader idea of how we approach our research in economic and social survey. You get an economic assessment of the region with an eye on the 2030 Agenda of Sustainable Development, and then we get to go deeper into certain research themes. I was sharing a few examples. So I just wanted to share these sort of a context-setting thoughts with you today. Let me now hand over to my colleague Vacharin, I think, who will take you through these specific focus and messages and findings of Economic and Social Survey of Asia and the Pacific 2022. Vat, over to you. Kindly unmute yourself.
Hi, good morning, good afternoon. I hope you can see the slide right now.
Yes, we can.
Okay. So I would like to take maybe another 15 or 20 minutes to take you to the snapshot and key messages of this survey 2022, which the theme building forward fairer. I'm sorry, I'm trying to move the slide.
It's stuck on your screen or something?
Yes.
Maybe Lynn has a copy. Oh, okay, it is. Yeah.
Okay, so let's start with some key messages. We all know that amid the COVID-19 pandemic, the issue of persisting inequality, income inequality in particular, has been at the great of the attention. I'm going to show you that for the region as a whole, last year economic growth rebound, but the key issue is that many people are being left behind from this pandemic. That's why the context of this in the survey 2022, we're going to look into the issue of this inequality that also go beyond this traditional macroeconomic policy thinking. There are three sets of policy that we look at. The first is the fiscal policy, with the key messages of government need to spend smart and tax fair. We're also looking at the monetary policy, also central banking, that they also need to go beyond just keeping the inflation stability. And also the last is a more long-term nature of the structural transformation, in which the key message is that don't wait until toward the end and use the tax and transfer to fix inequality, but there are ways that you can shape the market to influence the inequality in the first place. Okay, so the first part of the report is about macro assessment that Hamza mentioned. The data suggests that in 2021, the region as a whole growth had rebound from a slight contraction in 2020 due to the pandemic. Despite this recovery, our calculations show that the output loss in the region is still a significant amount of $2 trillion US dollar. And this is just the gap between if we don't have the pandemic and the growth continue at the previous trend, and compared to the actual trend, the GDP loss is about 2 trillion US dollar. And more importantly, despite the overall rebound of the economy, we see that there are some differences across sub-region. In particular, East and Northeast Asia, they tend to, especially in China, they tend to contract before other sub-region, but they also rebound at a quicker pace than other region. What is not being shown here is the Pacific, because we are showing the quarterly GDP number, which is not normally available. But we also know that in the Pacific, the hit is larger and they recover more slowly. So within Asia Pacific, there are many differences as well. And not only between the country, but also within country, because the pandemic has hit some industry heavier than other. And for example, the yellow line show you the hospitality, restaurant, hotel, and this is not it's far from full recovery from the pandemic compared to other sectors like manufacturing, the blue line. And another increasing concern, apart from this low and sluggish economic growth, is that because part of this crisis in the Ukraine, it has pushing up the inflation globally. And if you look at the chart, there are many Asia Pacific economy in which the latest inflation rate that has exceeded the official target of the central bank already, about maybe more than half of the region. And this is not only about the war in the Ukraine, but also even before that, during the pandemic, this trade disruption has pushed up the shipping costs, and also a weaker exchange rate in many countries, on top of the fiscal stimulus that has been introduced in many countries in response to the pandemic. So going forward, we think that the recovery this year and next year are going to be quite moderate. And you see that this year growth value go at about 4.5 and next year at 5%, which is still below the pre-pandemic level of closer to 6%. And there are also many downside risks, such as the lockdown in China, and also the speed that the recovery of the labor market. And on top of this, more recently, is the crisis in the Ukraine and rising financing costs, inflation, and interest rate. And so part two of survey 2022, building forward fairer. First, we look at why it is important to look at the issue of inequality. And from the growth assessment, we see that there are some K-shaped recovery. Not all the country and not all the industry, they recover at the same pace. So some being left behind, especially the youth, informal worker and women. Our estimate also show that based on the $1.9 per day, up to 85 million people in Asia Pacific will be pushed back into this extreme poverty. If you used $5.5 threshold per day, this is increasing to up to 160 million being pushed back into poverty. So in this survey that I mentioned, we look at the three broad set of policy. The first is the fiscal. And we know that the different type of the fiscal spending is going to have a different impact on income inequality. So our analysis, the charts show you that if the government, for example, this is showing you the 1% spending on education. Okay, if government spend 1% of GDP on education, to what extent this can help reduce income inequality? And this give you the dot and the bar give you a range of the estimate from country around the world, including ESCAP country. And the same, if government spend on healthcare, it's going to help reduce the income inequality as well as the direct and indirect transfer to people. And all of these four groups, they are sort of spending, and the rest, new three would be about the taxing part. So one essence, one key message from this is that spending can help reduce income inequality to the greater extent than the tax reduction. And in terms of the fiscal space, we know that during the pandemic, the size of the fiscal deficit has widened in most countries. If you look at 2020, mainly because of this large fiscal stimulus at the same time that tax revenue has been decreasing. As a result of this, and also going forward, the public debt level has increased notably in 2020 and continue to be at a high level in the next several years. Another trend is that you look at the projected fiscal deficit. We are going to see that fiscal consolidation is going to taking place in many countries of the region. That is to say that the size of the fiscal deficit going to be smaller and smaller. But the implication of this is that how you actually implement this fiscal consolidation. Our analysis also show that after episode of the fiscal consolidation, if the government, how the government decide to do fiscal consolidation affect the income inequality. In general, based on the past history, even a few years after fiscal consolidation, income inequality tend to increase at the same time that GDP per capita growth tend to decrease. So our key argument is that there are many ways to reduce your fiscal deficit, but please do not reduce the spending on healthcare, education, and social protection, because these are the three areas which are going to help the poor and vulnerable household more directly than other areas. Especially in the term of the healthcare, for example, the region, which is represented by the blue line and dotted line, we know that the region as a whole, we are already spending on healthcare at a much lower rate and then in the rich OECD economy and also the rest of the world. And similarly on education, spending in most countries, whether by mean or median values, it still remain the suggested 4% of GDP level. And also on the social protection, at the moment, less than half of the people in the region, they are covered by at least one area of the social protection measure. And this vary a lot across the Asia Pacific sub-region. In particular, in East South Asia, this coverage of the social protection has been much lower than other sub-regions. So based on this data analysis and all that, our policy issue is that for healthcare and social protection, first, we need to provide this universal coverage for both healthcare and social protection. And also because given the shrinking fiscal space, government need to increase the efficiency of the spending. One area with large potential is to introduce this digital technology, for example, this telemedicine, and also to the extent that people can receive the cash transfer to the digital banking account. For the education, studies show that if you invest in early age education, that's going to give you much higher return compared to the investing in at the later stage of the education, and also to improve the access to education and to close the digital divide. As you see that the online learning was not available for all people during the pandemic. But going beyond the spending side, also on the revenue side, the data suggests that at the moment the tax to GDP ratio in the region is about 20%, which is still lower than in the developed country, and also slightly lower than in Latin America. But the more important point is that a large part of this tax revenue is coming from indirect taxes, such as the value-added tax and taxes on other goods and services. And we know that these indirect taxes, they are having a worse impact on the poorer people. They are not making income inequality better. So it's not about the size, but what is the composition of that. And the tax is low because of many factors, but the two that we are highlighting here is because of the high tax avoidance. For example, the misinvoicing alone is causing about almost 8% of tax revenue in the region. And also the last side of the informal economy, almost 70% of the worker being employed, they are from the informal economy, and this all contributing to the very low tax level. So to improve the tax correction, there are three ways on paying the fair share and ensure that everyone in the society comply with the existing rule to close the loophole and to fight this illicit capital flows. To expand the tax base, this is to address the last side of the informal economy and to how to make the digital economy paying more taxes and to shift the tax burden away from the poorer people, and also to make the tax more progressive, especially in the region which we rely a lot on this indirect. We should move to direct and more progressive taxes. So another aspect that the government can do apart from this fiscal policy is to this structural transformation. The chart shows you the blue line showing you the size, the level of the income inequality in a sort of the more developed country, and the red bar show you after the tax and transfer by the government, to what extent this can help reduce the prevailing inequality. So the message is that in high-income country, the Gini at whatever level, but the size that the tax and transfer can help to reduce the inequality is quite large compared to the Gini level. And especially if you compare this to the developing country in the region, you see that the size of the red bar are smaller, which means that the effectiveness of tax and transfer to reduce inequality is smaller. And this is due to many reasons. For example, the size of the fiscal spending is already smaller in developing country, but also the targeting is tend to be poorer. And related to that is to show you the past trend of the change in the Gini coefficient, which is the blue bar. Okay. For example, in Thailand, during the past 3 decades, the blue bar is large, which means that the income inequality has reduced a lot compared to other countries. And this is also true in Iran, Malaysia, and less extent in Kazakhstan, Philippines. But these are the countries in which have seen lower income inequality in the past 3 decades. But the contribution of the fiscal policy to this income inequality has been diverse. In Thailand, if you consider the market outcome alone, income inequality is decreasing. But for some reason, this tax and transfer is pushing up the inequality. So based on this historical data analysis, we suggest that there are two key messages here is that before relying on the fiscal policy, there are ways to adjust the market to make it more equal, which we are going to give some example. And even after the market outcome, there's role for the fiscal policy to also reduce inequality afterward. The next part is as many of you would be familiar with this Kuhn's curve. Okay, the idea is really simple. When the country remain quite poor, once they become richer, income inequality tend to increase because people move from rural to urban, and urban people they receiving a lot higher income. But as country become richer and richer, it's argued that the income inequality should be declining because country become more urbanized and industrialized. So this affecting a larger size of the population in the country. But the newer idea which is to be tested also this new emerging trend of this digitalization, whether it is going to widen income inequality even further as the country become richer. And we look at this concept from the historical data of many Asia-Pacific economy. So countries such as Thailand, that we said before that income inequality has decreased a lot. This is represented by the gray line in the middle of the chart. You see that once Thailand become richer, income inequality has been going down in the same way as the Philippines. But the point of this chart is that the evidence is mixed. This Kuhn's curve is not being observed universally in the Asia Pacific, which implication is that there are also the room for the government to shape this inequality trend. Based on these country experiences, we have highlighted a few good and not so good factors that are going to shape the inequality. The good one highlighted in green is that if the country in the past has sustained this fast creation of the productive job, it's going to help reduce inequality in the same way as universal access to education, access to infrastructure, and decent rural development. In contrast, if the country has, for example, focused the employment in the informal and low productive sector, have a lot of the young proportion of the youth population, and all of this is going to be contributing to the rising income inequality. That is about the thing of the past, but more recently, also we know that this the digital age, robotic, and also AI revolution is changing some of this traditional thinking about the relationship between income level and income inequality. For example, if you focus on the left side first, the smaller blue show you that the contribution of the manufacturing sector to the GDP growth has indeed declined in the past decade compared to the previous two decades. In contrast, this sort of orange brown has increased, which means that the contribution of the modern services to the GDP has increased. So, which is important because traditionally we tend to think that manufacturing is good because it generates a lot of the employment, but service is a low productivity, which is not going to drive the economy. But because of this modern services sector, this changing a part of this trend, also true for the employment. But our policy suggestion is that this is a multi-dimensional thing. You should not focus only on one manufacturing or service sector. In a sense, at the bigger picture, we highlight that there are at least three things that government should do. The first is to guide structural transformation toward the job-rich path with a few policy options. For example, you leverage the public R&D spending in a way that toward the policy which is not so employment reducing. And the second area is to shape this income distribution outcome of the market do not wait and rely on heavily on the fiscal policy to fix things. One of the possible options is to strengthen the labor bargaining power in the wage setting or the decision making of the firm, and also to, as obvious as equalize the access to education, and also to manage this disruption which can be caused by this technological revolution. As an obvious policy option is to make sure that the social protection is universally available, and also to this job training, for example. And the last part of the policy is a bit newer and less conventional in a way that most people tend to associate central bank with the issue of inflation and financial instability. But more and more, people have been talking about how the central bank can contribute to the inclusive and even green development. And the most obvious reason why the central bank should care about this, because on the day-to-day basis, when the central bank adjusts the interest rate, this have an implication on income and wealth distribution. For example, when you have a higher interest rate, then when you have a lower interest rate, this borrower and asset holder is benefiting from the lower interest rate. But in contrast, this old age retire people, they will be worse off by lower inflation because they rely on deposit income. But even when the central bank do not care about what they are affecting the inequality, they should also care about the inclusive development, because inclusive development, income inequality also affecting the effectiveness of monetary policy. For example, if the wealth is highly concentrated, then not many people will have the bank account, and the role of the people spending in the, for example, the marginal propensity to consume. If the government increase the fiscal spending, it doesn't necessarily lead people to spend more. Or when you lower the interest rate, it doesn't lead to higher spending, simply because people are disconnected from the financial market. And we look at 4 areas for this inclusive central banking. The first is the monetary policy conduct, and then we move to the official reserve management, currency issuance, in particular, central bank digital currency, CBDC, and also the role of the central bank as a financial sector regulator. For the inequality-mindful monetary policy, where we are today, many central banks focused a lot on maintaining inflation stability. But in the report, we argue that there are also other things that they can and should do. For example, even though this sounds really fundamental, but not many central banks in the region, they know the distributional impact of their monetary policy, and this can be studied to the greater extent. And if they are more ambitious when they are about to make a decision on whether to increase or decrease the interest rate, they can consider how is that going to affect the different of people in the society. And also many emerging economies in the region, they have implemented this asset purchase program, basically to buy government bond. But instead of buying just a typical government bond, why not buy this social bond, which is becoming more available in the country, in the region. On the managing the official reserve, where we stand today, government, the central bank tend to focus on safety and liquidity of this reserve, but we argue that they can be more proactive in the way that, for example, they can study if they move part of their financial official reserve to another financial instrument with social gain, how is that to affect the risk level. And in the same way that now today, many central banks have set up the committee which involve external people to make a monetary policy decision. Why not this can be done in the same way when they manage the official reserve. On the CBDC, this can be a technical issue, but basically, there's the potential that can be used to enhance the financial inclusion. If you choose, for example, a design feature which does not rely on the banking system in the country, or does not require a user to present the national ID, this naturally CBDC can be helping with their financial inclusion. But as with many things else, CBDC is not always good. It comes with a really high risk. For example, if people in the society, they don't hold cash anymore and they move their money to the CBDC, it's going to cause some financial instability. Basically, bank will not have money left, and this is financial bank run, for example. Finally, as a financial regulator, central bank can encourage some of these unconventional financial instruments, especially those that benefit the social development. For example, sort of the social impact bond or sustainability linked bond, and the central bank can support this by providing a subsidy to help support the high verification costs, and also to work with other policy makers to develop this taxonomy on what is classified as a social instrument, what is not really qualifying. At the bigger picture, for the central banking part, we see that even though this is not something that all the people would be agreed that central bank should step forward and work on this inclusive development, but there are minimal things that central bank can and should do. Some things like promoting financial access, education, and consumer protection. These are basic things. Even though this is basic thing, our review show that only half of the central bank in the region are explicitly doing this financial access, financial education, and consumer protection. Another minimal thing, a lot of the central bank is putting a lot of money with the commercial bank. Why not move to the commercial bank with a higher rating on this environmental, social, and governance performance? And to move forward with the inclusive central banking, there are many legal changes which is required. So it is not something that can be done so quickly, and government also need to work with other policy makers in the country. Finally, the last slide, the key takeaway, inclusion has been at the center of the economic policy. And in this survey in particular, we highlight that increasing the efficiency of spending and also the impact on the poor should be of the central attention. And because of the fiscal space is shrinking, you need to expand the revenue and also at the same time shipping burden away from the poorer people. On a longer term structural transformation, just do not rely and wait and rely too much on the fiscal policy. You should tackle the market outcome by promoting transformation, which is job rich, and also to empower the labor. Finally, central inclusive banking is possible, especially in a country in which inflation remains below the official level, in which the official reserve remain large. And we highlighted ways how to do this. Thank you.
Thank you, Wat. Thank you very much for a very comprehensive take on the entire survey's findings, main messages. We have about 20 minutes for discussion, feedback, suggestions going forward. I'll have something very specific for the RCs, but towards the end. But before I open the floor, I see David is actually here. David has joined us. So David, my apologies for putting you on the spot. Would you like to say some quick remarks on the usefulness of these things from your perspective, or any suggestions before we open the floor in general?
Sorry, let me just put my ears in. Sorry, I was listening remotely.
No, thanks very much, Humberza. That was extremely comprehensive and very, very interesting. Really, as you say, one of ESCAP's premier products. And obviously for our RCs, not only just in the CCACF discussions and how we go forward on our programs, it really sets the scene. I've always believed that the basis of all politics is economics, and at the basis of economics is a salaried worker somewhere down the line. So it actually put it in very good perspective to me. Very useful. I don't have any comment. I was really just saying this is real value added of our engagement. If we can make the connection, particularly between our economists and your work at ESCAP, we really close an important data and knowledge gap. So extremely useful, Hamza. But I'll just continue listening, and I look forward to the engagement with the RSCs and our economists, who we've also asked to join this conversation. But well done, and thank you very much. Yeah.
Thanks, David. Thanks for the encouraging words. And I have, as I said, something specific in terms of exactly what you said. How can we strengthen our more explicit collaboration, but towards the end. Before that, let me see if colleagues have specific questions for the presentation for that. So kindly raise your hand, and then we'll be happy to respond and discuss further. Yes, Simona, please go ahead.
Thank you so much. So I'm hoping I'm not the only one, but first of all, I wanted to thank you, Hamza, and colleagues at ESCAP for this initiative to have a follow-up meeting after you circulated the results of the survey. I have a few questions. So first of all, most of us would like to, I thank you for the seeds data that you shared, and I'm just telling my colleagues in small island developing states that I'm going to share the data with them. I asked Hamza after the survey results were shared, if possible, to extract the data for small island states. So I do have the data, and thank you so much for that. Hamza, I have a few questions. So we understand that for the follow-up on the food systems and the decision to move forward with support for certain countries, some of the data of the regional commission has been used. And I just wanted to clarify that, because we had a follow-up discussion with the Global Crisis Response Group, in which we agreed that the way the data was interpreted was not necessarily very correct. So we were discussing about, for instance, the debt versus net exports, and then the servicing as a share of GDP, and looking into that, whether we had the clear story or not. I will not go into details. I just want to know if the data came from the ESCAP for the follow-up on the food system and the joint SDG fund allocations. The second point that I wanted to make is, first of all, if we are to have this data disaggregated per country so that we can see how countries fare versus the region, I'm hoping that that could be possible as you know, a way forward for ESCAP to consider, and maybe in that regard to use the model that you guys have and allow our economists to learn more about how to use it for a country-specific outlook. I have another question that I wanted to place very briefly. In our analysis with respect to what drives SDG progress, with the data we have very strong correlations with respect to public spending versus SDG progress. For instance, the public spending per capita for seeds is at 7,100 whatever US dollars, whereas progress within the 75% to 100 against the SDG targets at this point in time requires a minimum of 19% public spending. So if we can have that analysis done by ESCAP, then it's going to be very easy for us to make the case moving forward. And the last point that I wanted to make is that there is a request that you might have seen that came from the big asset managers to FAO to produce a roadmap on decarbonizing food systems moving forward. I would like to know if ESCAP wants to work on that, because I think it's extremely important. The asset managers that are willing to work with us own 14 trillion US dollars at this point in time, which is, you know, a great market force in moving, and that would be extremely important for us to be able to work forward. So thank you so much. Please produce these analysis when you can. Those are very valuable to us. We want to use the macroeconomic model moving forward, and an SDG progress analysis versus public spending would be important to make the case that it is about education, health, and other components of the social contract. Thank you.
Got it. Thanks, Mona. I see most of your questions actually are not on survey per se, but on other work we have been doing, working together, especially regarding the war in Ukraine and the work we're doing with Untitled. I'll come to those responses after I take another round of questions first, but I have your responses for your consideration today. I have Richard Marshall. Richard, please go ahead.
Good afternoon, everybody. Greetings from Malaysia. I found the presentation very, very interesting, and particularly on the central bank, what central banks can do in relation to inequality and inclusive growth. I'd not heard that before, and that's genuinely novel to me, so thanks very much. But I had some observations on, the recommendations you make in terms of economic policy, and things that perhaps were somewhat missing. I wondered if you had a view on these. One is the spatial distribution of income. Very much majoring on factors which affect the size distribution. Often we know, and even here in Malaysia, that the spatial distribution is extremely important in terms of lagging regions, lagging communities, and whether actions, typically, actions are advocated to address this issue as well in terms of equalizing in growth patterns, both either through tax incentives or also through market interventions, and also stimulus. I wanted to ask about ongoing stimulus. You don't mention really how that itself can, the composition of stimulus, how different types of stimulus package affect GDP growth, on what is the not only the overall gain from stimulus measures, but also particular stimulus measures targeted, as you say, at communities with very high marginal propensity to consume. You could conceive even of a balanced budget multiplier effect, where you taxing the rich and then reallocating, actually having a growth effect in an economy. So that was the other thing. And very, very finally, I also wanted on Kuznets, right? It's fascinating that you mentioned Kuznets. And of course, the empirics are very questioning of what Kuznets said. Most of us walk around saying Kuznets has been discredited. I mean, I don't quite believe that. I'm kind of with what you said. But it does point to the importance of, surely, of country-specific and country contextual answers. I mean, I don't quite believe, when you, I kind of beat it a little bit, but I don't quite believe when you say that all of this missing improvement in inclusion within the economies you quoted, Thailand, is purely due to the changes in markets there, whether it's by accident or by policy. I think there are still certain features that drive an economy towards more equitable outcomes that not necessarily might not be amenable to policy change. So that's it from me. Thank you very much. But overall, very impressive.
Thanks, Richard. Thanks for the encouraging feedback. Vat, while you collect your thoughts, and I have also noted the questions, I have one more, and then we'll start responding. Owais Parre, please go ahead.
Thanks. I hope you can hear me. Yes,
please go ahead.
Well, thanks a lot, Hamza. Thanks, Vat. Very interesting presentation. I had a comment. I had actually two comments. The second one, probably I'll explain that first, because you talked about your engagement with the RCO economists. By the way, I'm economist in Tajikistan. I just wanted a few words on that. In fact, we were involved in this report. I had some consultations with Shweta, and we also contributed a short paper which was more for discussion to look at the case of Central Asia and structural transformation here. So it was good when the report came out in March, and so we had a bit of skin in the game, so as to say. So very happy, and in fact doing that exercise helped us to think a little bit more about a very critical problem which affects many developing countries and middle income countries, more so in Central Asia, because of the nature of the structural transformation that has happened in this and lack of diversification, even though there are variations in terms of the per capita income in the country. So I think one particular thing which I liked, and that's where we had a lot of discussion, and our contribution to the report in the form of a short paper was precisely related to this pre and post distribution. And I think this report or survey has very clearly sort of highlighted the pre-distribution, the role of that. And I think this is an area where in UN, we don't talk so much about. We tend to focus on the distribution, how spending can be increased in health, education, social protection, which is all very important. And I'm not saying one is better than other. I mean, in the case of Southeast Asia or East Asia, their growth story clearly shows that both played an important role. But I think if I can, I think it was that inclusive growth that really created opportunities for people to engage in the growth process and then benefit from wealth creation. And we should talk about wealth creation in UN. I don't think we talk so much about it, because that's the key driver for long-term economic development. Of course, now the context is a bit more different, and countries such as the ones in Central Asia can learn from the failures which often are not highlighted. In the case of South or East Asia, particularly related to environment, and with climate change, and of course with digitalization, what does it mean to follow in the footsteps of these so-called Asian tigers? So I think the report does it very well. And I'm glad that it came out at a really critical time. So hopefully we'll be able to engage more on this, because it has sort of whetted our appetite, and we'd like to do more as far as our region is concerned. Thank you very much.
Thanks, Awais, for your observation and suggestion. This is exactly the kind of thinking I was going to elaborate a bit more, but let me quickly respond and then ask Wat. I'm a bit conscious of the time. Right now, I don't see any additional questions, so let me quickly respond. Simona, as I said, your questions were directly not on survey 2022 per se, but on food system and data aspect that we had a separate discussion. The methodology was decided by UNCTAD. They picked 2 indicators for the 3 streams, food, energy, and financing, and the regional commissions provided data on that. But there was uniformity across the entire globe. So there were some judgment calls that had to be made. I think there is room for flexibility. Zheng informs me he had a good discussion with you guys yesterday, and there may be a flexibility to adjust. We've spoken to Carlos and team, so you should be okay on that part. The second is roadmap of decarbonizing food system. I don't think so. We have expertise, so we won't be able to pursue it further, at least in my team. Maybe if something else comes across from other teams, I can let you know. We'll be very interested in knowing more about your SDG progress and public spending correlation work that you are sharing, or you're mentioning you're aware of that. Fiscal policy issue or public spending issues is a recurrent theme that we highlight in all surveys. So if we can get that, we can showcase in the future and link it with our policy suggestions, that's for sure. Richard has a question on data, spatial distribution of income. Richard, when we started doing the research, we looked at the possibility of looking at the spatial distribution and intergenerational inequality. And we did some work on that actually prior to the survey publication or chapter, but data became an issue across the several countries. That tends to be one of the constraints. On its own, it's a valued consideration for sure, especially for country level work, right? So it certainly makes sense to get into this spatial distribution and even intergenerational distribution aspects. So if we get more data for more countries, we may be able to showcase in future. On stimulus packages and composition, you will see some details in the survey itself, actually, where we discuss where the spending has gone, and that's not the right way to go after. And that was our criticism, and then saying, well, look, you can do a lot. One message I've conveyed in several policy dialogues, for instance, is don't complain to government policymakers. Don't say that you don't have enough resources. You actually have wrong priorities. You're choosing to spend the limited resources on defense and on targeted subsidies when you are saying you need support for social protection and healthcare strengthening. And here are numbers. So we shared some numbers on rechanging the priorities part as well. I'll let Wat take the Cousinhood curve observation, a few other points. Oasis idea is pretty good. Role of pre-distribution, actually, you're right, much less discussed. We have talked about in the past also in the structural transformation sense, where workers move from low productive activities to high productive activities and what kind of income distribution patterns it creates. And we touched upon again in this particular context. But yes, typically policy advice in the UN system primarily tends to be on those lines. And here comes my suggestion, and I'll say it now before handing over to Wat. What I was telling to Wat, how we can strengthen our collaboration with RC and RC economists. So right now we are thinking and working on the concept for the ideas for the next year's survey, which we'll publish in April 2023. So between now and November, we'll be drafting the first draft. And in November, we host normally this expert group meeting where we engage with experts given on topics from different areas, think tanks, international organizations, and government officials, and then get feedback on our work. So I think this year I intend to actually create a dedicated session, probably with RCs, with the intention, if they can share country level examples, which we can highlight as boxes, some insights that, like Simona was saying, she has some results on correlation, for instance. So any country, based on the RC economist's own work, an issue that is in relation to the overall theme, which we'll be sharing with you, if it has relevance, we can try and integrate your assessments, your analysis into the survey messaging as examples from the country level work. I think it will enrich our work quite a bit, and it will become a little more formal opportunity to work with them. Of course, in the run up to the EGM before that, with Server's help, I'll try and actually have a couple of informal sessions, especially with RC economists and with our team, to try and explain what we're going after, and you guys have so many ideas how to fine tune things, how to bring some country level examples and perspectives. So that was my major ask in a way to all the RCs economists, like, let's engage a bit more, because we can learn quite a bit from country level experiences and be happy to showcase if anything on the topic can be mentioned. So thank Wes for touching upon that. That put me perfectly on the closing remarks part. Vat, there any questions any observation you want to make? I have 2 more minutes on my clock. So over to you for last words.
Okay, I'm just, I think well, you already responded, but I'm just trying to provide a bit more information for Richard questions. I think especially on the composition and targeting of the fiscal stimulus, and I think it's back in survey 2021. Okay, there's a small section which we look into this. We say if the government introduced a lot of the fiscal stimulus, how is that, which proportion on inclusive, and in that context, women in particular. And the result was that, as I remember, maybe only 1 in 5 measures, they benefit women. Okay, and we also look at how much stimulus supporting green, which is even worse, because a lot of the fiscal spending after the pandemic, they are supporting the fuel, fossil fuel. Okay, and on the special distribution, this is, I think it's really country specific. I know that you work on Malaysia, but like Sabah and Sarawak, and this is driven more by a geographic factor. Okay, and to provide healthcare infrastructure per capita in that remote island, this is a special challenge, which I think is also applicable for Pacific Island as well. It's not thing. And yeah, I think apart from that, on central banking, thank you, and also to let you know that we have a plan to actually go to Kuala Lumpur in late July to hold a dialogue on this inclusive and green central banking with CSEN. So I hope to go, and then probably we can meet in person by there. Yeah.
Okay, thanks, Vat, for succinctness. I don't have any questions, but I see some in the comment section. There are a few observations, I think, by Deandra and then probably by Simona. But in the interest of time, I'll request that I request Vat, maybe he can respond later on bilaterally to those questions if you have specific answers. For today's purpose, I want to wrap it up. I want to say thank you very much for setting aside time. Increasingly, I've become aware of the many asks that are there on the RC's time. So really appreciated you were able to set aside time. RC economists, of course, are spread thin on multiple fronts. So genuinely appreciate your support and participation. And as I shared, I intend to build forward a little more specifically, concretely, our collaboration in terms of getting your ideas and inputs feed into this flagship publication of ESCAP. And once we get the publication out, we reach out back to you and with your help, try and implement some of the ideas in different countries. I stop here. Any last words from you, David? And we are done here.
We look forward to that publication. Thank you so much, Hamza. This is really, I hope this will be a regular thing.
Yes, it will be.
Yeah, it's really great for, on a quarterly basis or whatever, for our economists and our RCs to be plugged into this incredibly important data resource, which is ESCAP, on, trends in the economy in the region and impacts of Ukraine, food crisis, etc., all wonderful stuff. Thank you very much, Hamza.
Thanks, David. Thanks a lot. I've been in touch with Servat. Actually, I'm going to set up once a month or once in 2 months kind of informal exchange, 1-hour sessions, just to learn what's going on in the countries from the economist perspective and what we are doing